We're looking at all the big buzzing business news. What's buzzing right now is Wall Street, and see the sharp recovery that's happening right now. After the drastic sell-off yesterday, now the sharp recovery in the Japanese market is helping things along on Wall Street. And the street's fear gauge, that is the CBOE volatility index, has slid about 28% and come to the 27 kind of level. Even the tech majors have seen a rebound today. Stocks like Nvidia, like Meta, both trading in the green. Apple continuing to decline, but on the back of earnings, some stocks are seeing an uptick, like Uber and Palantir Technologies and Shanghai-based Yum China as well. They're all up by at least 6% after reporting a good set of numbers, robust numbers for the second quarter. But as of now, what's happening on the indices? Let's pull that up as well. The Dow is up about 0.75%, even higher. More than 39,000 levels is where we're at on the Dow. 1.2% gain on 16,394 is where the Nasdaq finds itself, and 1.2% gain even on the S&P. So we're seeing green right now on Wall Street, and that's remarkable for the kind of slide that we've seen only yesterday. Joining us after a very long time on ET Now is Seth R. Freeman. He's the managing director at GlassRatner Advisory and Capital Group. Such a pleasure having you with us, Seth. Tell us about this perfect storm that we were referring to not too long ago. The factors are still at play, but from the slide yesterday, we're seeing this kind of recovery. Do explain it to us.
Quite a nice recovery for first thing in the morning. Well, it certainly disrupted, the holiday time for many hedge fund managers and investors who had to get on their phones from the beach and deal with their trading problems.
So which are the factors now that are really going to determine the kind of direction the markets are going to take? Because there is so much at play, not least of which is going to be whether or not we're going to have a hard landing when we talk about the possibility of a recession in the US and how the Fed is going to move to try and get growth up and running. How do you think that's going to pan out?
Well, I don't think the Fed is going to have a knee-jerk reaction here. It is surprising that basically a quarter basis point change in interest rates in Japan could jar the global market so strongly. But the currency gain, really took away the carry trade benefits. I think it was around a 13% impact. So I think this is really a situation of less prospective, coming recession and more of internal market dynamics.
Seth, we are also seeing some kind of recovery because when you saw some of those big tech companies take such a big hit, then you wondered about artificial intelligence, whether it has been overhyped, what gains the companies can make. But now seeing this kind of recovery, is it all just volatile? Or do you think that some of these arguments that were being made to explain the kind of hit on big tech stocks, that don't hold?
Well, the tech stocks have really run up a lot, and they've also, represent such a big piece of baskets, index baskets. So when they sell off, it's going to have a disproportionate impact on these different indices. And I think that's partly what we're seeing. And also, in the summertime, we have just lower volumes in general. So I think these are a lot of, the effects of professional trading going on, less, a real sign of some crash coming up in the near future.
So now, as far as the expectations go in terms of corporate earnings, and we are seeing some earnings-based reactions on stocks as well, how do you think they're going to fare over the next couple of quarters? Where would you position yourself now at this stage when you're seeing so much volatility?
Well, I think that operators and investors have to look clearly at whether they're going to see growth and the impacts of higher interest rates generally. I've been very involved in the restructuring area in the last few years, and we're seeing a tremendous increase in bankruptcies, and the impact of term loans and other financing rolling over, and real estate in particular needing to be refinanced is having a very harsh effect on many kinds of businesses. So I do, on a very, kind of down to earth, on the street level, do envision a lot of turmoil for especially mid-sized businesses.
As we see central banks around the world unwind the kind of high interest rate levels, of course, Japan is a separate story altogether, but including the Fed and other central banks, how do you see bond yields move? Today they moved a little higher, but in a broader sense, what's the direction that you see?
Well, if rates go down, this is going to impact the bond market. We've had a flip in the inversion this morning because of the volatility. But interest rates are high. The ironic part about it is that the increase in interest rates was actually designed to modestly increase unemployment. So to see employment growth be slower than we expected, it means the Fed policies are working. The question is whether they're going to overshoot. And I think we're going to have to really look at Q4 to really analyze whether there's a different trend.
Whether or not there is a different trend and whether the policies of the Fed are working or not in the larger economy, it's something that the markets could be pricing in, may not completely. Expectations are there, but whether or not we're going to see the impact really play out on Wall Street in this entire process is all up in the air. So many factors at play, and many were right in calling it the perfect storm, but we'll continue tracking it. Seth Freeman, always such a pleasure getting you on ET Now. Thanks for joining us.
Thank you.